There are some super important indicators that we need to look at that might signal that we're going to have some reversal or at least some upside on the altcoins, as that is what my portfolio requires. And in this update, we're going to be looking at the portfolio. Let's get started. During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin. When is ETH finally going to move? It's fucking dead. On the moment that we are making this update, it's making a new cycle low, which is brilliant. And in the meantime, we can see that some other asset is making a new all-time high. And that is what we currently see when it comes to the market environment. The sentiment is still super low. Stuff keeps going down. Fundamentally, we're still seeing a lot of progress taking place. But also the interest on social media dropped significantly, as the amount of YouTube views for every crypto channel has dropped by 30 to 60% in the past month. And I suppose that this month is quite equal or maybe even less than February, which shows that especially with the current market environment, the interest into anything related to crypto or Web3, it's just not there. And there's one reason why Ethereum keeps on falling, and that is because of the fact that Ether against Bitcoin and gold are super correlated to each other. So we have a chart here which is ETH versus Bitcoin. Actually, it is having a downwards momentum since 2024, and it made a new cycle low, which is concerning given the fact that Ethereum is the main prior indicator for markets to go up again. And when we look at gold, we can see that it has been having its upwards move, and it hit $100,000 per kilo for gold. And it continues to rally pretty significantly, in which it starts to become vertical, and it's getting to the end stage, and we'll get to that in a little bit, as that is an important indicator to look at, as these two have a super high correlation, because if gold is going to be dropping, the risk appetite changes, and likely you will see risk on appetite taking place, through which more people are interested into buying into assets like ETH or anything related to the altcoins. And I think that's why the upcoming weeks are going to be very indicative on what we're going to be seeing. Likely something in the area of GDP or the labor markets. As you really recall, the previous month has been terrible on the labor data. And if this month's data is going to be bad again, likely the sound surrounding QE and monetary expansion is going to fire up again. Now, let's look at important data where BlackRock is usually the market mover, and this chart shows that the amount of investment or capital that has been deployed by BlackRock is massively dedicated to Ethereum alone. So 1.7 billion is allocated into the ETH ecosystem, and then you get Aptos with 53 million, which says that a lot of things are centralized around Ether. And similarly, we know that Sergey and Stani and more people within the ETH ecosystem are currently doing a lot of work in the US to basically onboard the banking system into DeFi, which is a great signal for the markets as a whole. However, it just takes time before the actual adoption takes place. And then we also have a very interesting chart that came up from, or a post that came up from LinkedIn, that basically tells that Coinbase is doing a lot of connecting things when it comes to tokenizing of everything. Coinbase is tokenizing their own stock on Base. This means that token holders are going to get or borrow against their own shares. They trade them 24/7 and access opportunities previously reserved for the wealthy, which means that they are likely going to tokenize basically their own stock. And it's in the future, it's very likely that we will see tokenized shares coming up even more, which opens up the liquidity for investors to trade with those. You can easily use it as collateral to borrow against, which is also very hard to do nowadays. And this is the future. This is what is going to happen in the next 5 to 10 years. And this is where I think the thesis surrounding investing into utility coins comes from, as there is so much upside. And I think that if we talk about crypto that goes from, let's say, 2.5, 3 trillion to 50 trillion in the coming decade, that's primarily going to come from anything related to this thesis, which is that ultimately everyone tokenizes everything, and then we can swap and transfer it everywhere. And that is the good part. And when we talk about the liquidity cycle, I recall this chart from TechDev, which is a comparison between Bitcoin and the liquidity-weighted business cycle. And at this point, we essentially just hit the same resistance area again, and we are just flatlining before we have the big breakout. So this is combined between the ISM going up, which we recall from Raoul Pal. ISM goes up means that there is a more positive appetite into investments into the business cycle. And when the business cycle does great, then adoption is going to increase on those assets that imply more risk. Which means that in this case, we are on the edge of having that actual breakout. We're just having a final correction taking place. And all in all, everything is correlated until gold is going to be changing its momentum. In the sense that if we look at most of the altcoin candles at this point, for instance, SUI and the monthly candle, that looks fine. And that looks like a setup that we're going to see a strong April and a strong Q2. Same goes for Celestia, that's currently looking at a case where we are not having a bad signal and are likely to continue that strength into the upcoming quarter. So let's look at my portfolio, why we are moving so slow, and what is going to be a crucial breakout on lower time frames for all those altcoins. The good part about the portfolio is nothing has been happening. In the current few months, we have been losing a lot of value into the portfolio, and we are actually just following our plan. And I think it comes down to executing your plan in the right way. And as you can see, the current portfolio is hovering around $50,000, which is the same as last week. Markets are super boring. And we have one asset that we sold off in November or December, somewhere there, where we were able to allocate back into the assets that we have currently, and we were able to accumulate more of the riskier assets. So for me, it's all about having the strict plan. We are down more than 50%. I think that is very transparent. I don't know many guys on social media that are sharing their losses as well. And I think it's just coming down to executing your strategy. And I think I've been having this in the previous cycle, and I've been doing it into having a very good portfolio performance into the bull year. And I'm sure that it's going to happen again. And with the strategy, we were able to actually sell a little bit of Tao here and a little bit of Sai, around $8,000, and allocated that into the riskier assets, through which we were able to accumulate more of those. So essentially, we doubled the amount of Omni, we doubled the amount of Rocket Pool, Renzo, and Aevo. And if we look at Aevo, we bought the first stack at 90 cents, and then the second group at 15 cents. So the average that we need to get to is 50 cents to be break even. And yes, that is still a lot, but given this strategy, and if there's an altcoin that's going to outperform at first, and then we can rebalance it and even accumulate more of the coins that haven't been moving, then we can start compounding. So I'm not scared at all. But the thing that we need to look at is gold, which is currently showing a massive monthly candle again. I think I've not seen such a strong bull cycle taking place at all. It's very comparable to the period before we actually started the bull cycle with crypto in 2020. So we are making a similar candle here. The RSI is peaking massively, so it's getting a lot of overextension at this point. I think it's actually a massive outlier to the upside, but you can see that during the period of the strength of gold that we have a massive amount of weakness on Ether versus Bitcoin. So we can conclude that investing assets or money into gold is not going to crypto, and that is where the pendulum swings. So the moment that gold is going to change, likely the macroeconomic factors are changing, and that is where the momentum kicks back into the altcoins. And if we look at gold into the lower time frames, then it's all about waiting until we have to see a breakdown on it. And that's in the previous period where we had this breakdown taking place. We had a slight bump on the altcoins up already. Similarly, in this period where we had a correction, we initially thought that, this was also correlated with Trump, that during that period we were going to start off with the actual altcoin momentum. But I'm quite sure that with this current run of gold, we are getting to the end stage, and we are also getting to the end stage of the pain of the altcoins, that if this is going to reverse in the upcoming weeks due to macroeconomic factors, that is going to be the trigger for the altcoins to start firing off. And that is also going to be the trigger where finally Ether against Bitcoin is not making new lows anymore. At this point, it did. What do we need to look at? Well, we said that we need to break through 0.024. If that breaks to the upside, it's good. But at this point, we need to reclaim the previous support as the first step going forward. So I just want to see buying pressure coming in. And similarly, it's the same for those smaller altcoins. For instance, Optimism here, it's just facing a crucial resistance that it keeps rejecting on. That is the same as in the resistance area for Ethereum at 2150. As long as we stay below that level, there is not much confidence in an actual reversal. It's good for accumulations. It's good for you to position yourself if you have a long-term horizon. But it's not going to accelerate the actual performance. So what we want to see is a breakthrough through those levels, which is quite similar to the level that we see here at 93.5 to 95 cents for Optimism, because then it breaks back into a new range. Similarly for TIA, it's actually doing quite well in the sense that TIA is still stuck in the range, not making new lows. But what we want to see is that we break through the upper resistance at $4.25 to like $4.50. And if that breaks, it's going to be bringing us back into a new range. A lot of short squeezes are going to happen. And that is where the actual real party happens. And if I predict something about my portfolio, I think that TIA is going to move as one of the first few coins. And then I'm going to rotate those profits back into the other assets where I can start stacking and start compounding. And at some point, once the portfolio starts to run again, I also will allocate funds into stables, because then I'm able to buy the dip again. But we'll get to that once the momentum starts to kick in and once the views are likely going to go up as well, because I am sure that the interest will start to increase when the markets are going to go up. Finally, we still have this bullish divergence on the altcoins that signal, for instance with Wormhole, that we are still in a bottoming process and accumulation at this point. But ultimately, we need to monitor what gold is going to do. And when gold corrects, Ether will go up. So the conclusion here is that we're still not in the appetite of a bull cycle. We haven't been in one in the past 2 years. And we had some slight windows where gold was correcting, and when the appetite changes, and even during those periods, we have seen some incredible returns already. And that's why at these price valuations, it's still the best period to just stay into your positions, hold those, monitor gold, watch the macroeconomic data coming into the next like 4 to 6 weeks, making sure that you understand what's happening, making sure that your appetite is completely fine. Remove the entire 4-year thesis, because that's just not vital anymore. It's just nonsense. It's something Web3 people created for Web3 people, but it's not Web3 anymore. It is Web 2 coming into Web 3, so we need to adjust to Web 2 standards, which is more complex than we used to know. That's why a lot of people are not going to make money through this cycle. But as long as you stay patient and stay in the game and have the plan and execute the plan, you'll be fine. So that's my key update for today. I'll be back on Wednesday with a fresh new update. I'll see you again. Ciao.